Let's take a look at the year in review. We're closing in on 2 million in the stock picker portfolio. It's been quite a bumpy ride with tons of volatility. We will compare performance to the S&P 500. We will take a look at the largest positions in the portfolio going forward. We will take a look at the biggest win and the biggest loss of the year and some of the strategy with time diversification, showing how you can make a ton of money even though you're not right quite in the beginning. Eventually the strategy shines through. I have two perfect examples of this. We will take a look at the purchases and sales of the year and then also an outlook on 2024 with a forex element to it. So stay tuned and let's just go through that in this video. Alright, so if we compare performances, we can see that the stock picks I made was 24.17% return for the year, whereas the S&P 500 was almost 20%, and we can also see that the volatility in my portfolio was a lot higher than that of the S&P 500. So in terms of risk-adjusted returns, the S&P 500 outperformed, but in terms of total returns, my stock picks outperformed. I don't think that the extra volatility was worth, the 5% extra, and that's why the current strategy that I'm using with all new investments is just a global index fund that I'm putting into the tax beneficial Irish version of a 401k. Basically super easy, super automated and requiring nothing from me, being tax beneficial, being company matched, all that jazz. But hey, that's not a good way to make YouTube videos. We all know how amazing index funds are, but it's much more fun to talk about stocks, and that's why a lot of you are tuned in to look at stocks and to try to make a ton of money from the individual stock picks, as that's the increased risk but also the higher chance to make a ton of money. All right, so all in all, another year in the bag. Still looking forward to potential huge gains in 2024, and the position that I'm taking to try to maximize those gains as much as possible is the one that you see on screen right now. So Porch Group, no need to go further into detail on that. I made a ton of videos doing a lot of research on this company for you guys here on this channel. And they're still trading very, very low, in my opinion. They have lost year to date, although since I bought my shares at lower than $1, I'm big in the gain on this one, and it's the largest position in the portfolio as a result. It has grown by quite a lot. I won't trim it, and as a matter of fact, I bought some more of this stock, as you will see in buys and sells of the years in slide 5. And then we see on position number 2, StoneCo common shares, the payment processing solution for physical stores in Brazil. Quite a large uptick as of late, going from hovering around $10 to being close to 16 as I'm making this video. And I will show you buys and sells, only buys as a matter of fact, never sold, to show how time diversification can make you a ton of money. That will be the example on slide 4. Then we have Bauch & Health, the asset play. I talked about that one quite a lot as well. As a matter of fact, I've done a ton of videos on all of these stocks. I think that Vitrolife needs some more love. I need to make an update on them soon. Foot Locker, I recently did a video as well. Medical Properties Trust needs an update. It's quite the interesting sector as a whole right now, with REITs, with the property sector. However, back to Bauch & Health, still waiting for the spin-off of Bauch & Lomb. We did the calculations. We see that it's quite undervalued in this case. And as always, we have to be patient as investors to unlock that value for ourselves. All right, then we also have Palantir. Massive gains in 2023. They have outperformed the market by quite a lot, and I'm very happy to be a shareholder in this company. They recently turned profitable. They've done so a few quarters in a row, and this means potential inclusion in the S&P 500 going forward. So there's quite a few bullish signals for this company still. Then we have Vitrolife. They're doing components for fertilization clinics, so for all the women that need to freeze their eggs and all this kind of stuff. I know there was recently a cover in the Vanity Fair or something like this. I don't remember which magazine, but this girl boss who froze her eggs in her late 20s or something like this, and now at 35 she tried to make things work again, but she had frozen too few eggs. A lot of them failed, and in the end she was not able to do what she wanted. So I think that when we're going to see more eggs being frozen, and this trend is only becoming more and more popular, and these fertilization clinics are offering DNA services, and it's a huge package, and people are spending a ton of money on it. So this little Swedish company is such a front runner in this industry with amazing revenue growth and good profitability, even paying a minuscule dividend. However, they still have potential to grow a ton, and I'm happy to own this company. Then we have Foot Locker, bought at an attractive price. It went up a lot, and then it went down again, and we're basically on zero for this one in the portfolio. Although stock went up, stock went down, but I still collected my dividend, and I got the 6% or something like this dividend on when I bought, so quite happy about that one. It can continue to go up and down as much as it wants, as long as it continues to pay out dividends and hopefully increases it again in the future. As always with investing, a waiting game. Medical Properties Trust company, interesting in the property sector, REITs. It's been down a ton recently, and that's why I decided to buy into this company. My entry was not the best, as always. However, time always wins, and I will collect dividends from these companies. Once they start to increase, it will be even better. And the property sector as a whole is very risky right now. It's a ton of risk, but also potential to make a ton of money. Basically every property company is trading lower, and the videos that I make in different markets, whether it's America or Germany or whatever it might be, covering local property companies, they're garnering a huge of interest. I think that a lot of investors are aware that the sector is heavily oversold, and that with just a reversal in the way interest rates are going, there's potential for massive gains in that sector. Big gamble, big potential winnings. And then the cash position is tiny now. If you remember in the past, the cash position was large. Now it's all deployed. I think that this is, the bottom for the stock market. I don't think we're going to see a further collapse. So that's why I'm putting my money into the market, all of it. Let's get going. All right, so what about biggest win and biggest loss? Well, for those of you who have followed along on the channel for quite some time, remember Oscar Properties was one of the larger holdings. Well, that company has not performed very well, and it's down by a lot. So now it's no longer in the biggest parts of the portfolio. I was very wrong on Oscar Companies timing-wise, and they're in a lot of trouble now. So that position no longer among the largest ones. And then we have Porch Group. That's been an amazing position for my portfolio. I even bought before this when it was just slightly above $1, and then it went up to about 3 something, almost 4. Then it went down again, and then I bought some more, and then it continued to go, up a little bit, down a little bit again, and then I had some amazing timing here, buying even more. So just continuing to purchasing, didn't purchase anything here at the top, obviously. That was a great start to the year, and as you can see on the first slide, start of the year, we went up by quite a lot, and then it went down again, and then up again, and then down again, and tons of volatility. Definitely not for the faint of heart. But Porch Group created massive gains in the portfolio. Very happy about this position. I still think it has a long way to go. I'm not going to cut a flower that's showing strong growth. I'd rather sell off a position that's not performing as expected. And in slide 5, we will have an example of this as well as when I exit a position. But first, slide 4, strategy, Stone Co. common shares. Oh, here are the times when I bought on these blue little dots. I had to zoom out by quite a bit. So as you can see, I first found this stock in 21 here, so that's 2 years ago, and bought a small position to follow along, and then the stock dropped off by quite a bit and became very attractively valued, in my opinion. So I continued to buy, waited, bought, waited some more, bought more, bought more, bought more, and then it has done basically nothing for a very long time. I bought some more, and still waiting on this company to enter a bull market, because it's not the same company as when I bought in the past. They have a ton of more revenue, they have profitability, they're continuing to grow, they're continuing to execute on their strategy, and still share price has done nothing. That's what you get in an inflationary environment with rising interest rate and a lot of pessimism. We still need a shift of sentiment in the market to be able to see amazing returns from companies such as this. And if we look at the 3-year performance here, we can see down 77%. This is something that is going on for a lot of companies in the market. If we look at performance here for the last few years, especially for the high-flying growth stocks that was so high during the pandemic era, a lot of them is down by 80%, 90%, and I'm picking up these shares and have been buying them once they, was sold off at that heavy discount. Same with a ton of other companies that we looked at this channel. And I think that, all right, we've been through this massive bear market where stock prices dropped by 80, 90%. And picking them up now is a fair valuation, in my opinion. And that's why all the cash is deployed. What has it been deployed at? Well, you will recognize these stocks. I talk about them. You see them from the largest holdings. We see Vitrolife, Bausch & Health, Stone Co., Porch Group. Bought a tiny bit of Marine Harvest as well here. But only one sale, and that's Tilray Brands. Remember, I made a video on why I sold Tilray stock and why I think it's a good idea as well. Stock is down by a ton since then. I also made a follow-up video talking about, is it even a cannabis company anymore? They have basically shifted into being a beer company, in my opinion. It's not a pure cannabis play anymore. I can ramble on a ton about this company and how I think that it's still overvalued in this case, but in the case of Tilray, that's been a company that I've followed along on for a very long time. Just a small position, 250 shares to follow along and see what's going on, to have it in my portfolio. But I never increased in the stock, and I ended up just selling out of it because the company did not perform the synergies that I expected in the merger with Afria. The company was first called Afria when I bought it, and they have made some bad business decisions, in my opinion, ever since then. So this is an example of when I sell a share. I've held on to them ever since they were called Afria, and bad decision after bad decision after bad decision, I finally have to say that, all right, I was totally wrong on this stock. I don't think it's going to go anywhere. Still bleeding cash, still performing extremely poorly. It's time to cut my losses, move on, and buy more of the companies who are performing better instead. Will Oscar Properties be going the same way? It's too early to tell still. Still negotiating on lending agreements. It's going to be very interesting to follow along here. But as you can see, some diversification with another Swedish property company as well, and with an American property company as well, buying up some shares in that sector that I think is severely undervalued, but continuing to add on more money into the companies that I believe the most in, such as, for example, Porch Group again, such as, for example, Stoneco here, Bausch Health, Vitrolife, the largest companies, basically. So that's what I'm stocking up for in anticipation of 2024. In 2024, I think there's an excellent opportunity as well for investors who have a base in a small currency, because small currencies are weak to large currencies right now. What I mean by large? Well, the euro and the dollar, and a small would, for example, be the Swedish krona. And the Swedish krona is almost all-time weak to the euro right now, almost, not close to 12 anymore. It's gone down a bit in value comparatively. But what we've seen in the past is that once it gets shaky, then investors tend to flock to larger currencies such as the dollar and the euro and sell out of smaller. This happened back in 2008, as you can clearly see from the graph. And it's happened in a lot of other cases as well. But with the euro, we don't have a lot of data, but if you check your local currency and compare it to the dollar, that has a lot longer history than the euro, then you will see the same trend, that when the markets are shaky, when things are uncertain, the economy is bad, and as right now with the whole interest rate situation, well, then investors flock to the larger currencies. And then I think that we will see a reversion to the mean once the market becomes more bullish again, and the dollar and the euro will slide compared to weaker, smaller currencies. And then as a investor with the home currency in, a foreign exchange, basically, you have the opportunity to invest more into your local market right now and reap the gains. There's risk built into investing into a foreign currency right now, with the euro being so high compared to a lot of smaller currencies. And if you have euro or dollar as your base currency, such as myself, living in Ireland, we have the euros, well, then it doesn't truly matter that much. You're just going to buy in your local home currency anyway, and the foreign exchange won't really affect you that much. Sure, indirectly if you're doing a lot of export to smaller countries, but we've seen every multinational complain about that. These bad times, they always talked about, the foreign exchange weakening situation has negatively impacted our profits, and they complain about it. And then once the foreign exchange is more favorably, I predict that we will hear all the CEOs taking a ton of credit for the amazing results, the amazing revenue growth that they've been seeing, and we will not hear anything about the forex environment being more favorable once again. But that's just the way the market is. I would do exactly the same thing if I was a CEO and my compensation was tied to stock performance. So can't really complain there. That's just the forex prediction for 2024. All right, that's been it for this portfolio review. Taking a look at 2023, it was a year full of volatility. A ton of things happened. A ton of waiting, as always. Investing is not supposed to be exciting. It's supposed to be like watching paint dry. And in many months, that's just the way I feel. I don't look at the portfolio that often. Although I saw a comment here recently asking for a portfolio review. So just to make you guys happy, I decided to take a look at the portfolio, log in, make this presentation for you guys, copying in different data, etc., buys and sells, performance, all that kind of stuff, just to provide extra value for you. So if you appreciate it, please tap the like button and let me know, and maybe I will make another portfolio review in the first quarter of 2024. If we get 12 likes on this video, let's say, I will do a follow-up portfolio review in 2024, the first quarter. Alright, that's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.